What's up, guys? Welcome back to RT2CC Comic Club. Justin here, and today's actually January 1st, but I haven't gone to bed yet, so I want to get a video out, trying to stick to my streak. I really am trying my best to stick to it, so I don't care how late it is, I'm going to get a video out. Anyways, September 5th and 6th, 2-day recap, so let's just get into it, keep this video as short as possible. So on the 5th, we didn't do any trades, but on the 6th, we did a ton of trades, so I'll post them on the screen. Most of these were those cannabis stocks that I sold. So I'm not going to talk too much about them because I already made a video talking about these cannabis trades that I did. So please be sure to check that out if you missed it. But you can see we had some solid returns on these. Our best return was on Tilray, hands down. But we had a great return on some Apple calls that we sold. And then, on Square, we made 163%. AMD, 135%. So really awesome returns. The only loss we took was on the Weight Watchers one. So you can see all the trades there. If you want to pause it and see what else happened, you can. I also bought some more shares of AT&T. Again, I was trying to lower my risk. So I was trying to move more money into stocks as opposed to options. So that was my strategy. After taking all these profits that I took, I wanted to kind of protect some of them. So that's why I bought more shares of AT&T. Plus they had really good dividends. And so that's why I did that. Also, I bought some Target calls, and my reasoning for that was because all the reports that I saw from like the consumer sentiment at all-time highs and people being more likely to spend more money this year on holidays. I heard that statistic somewhere and I was like, you know what? I'm feeling pretty good about the shopping season. So that's why I bought some Target calls. If you know me, I don't normally invest in Target at all. So that was the only reason why I did that. So, and then the MTNB stock, I had heard from someone that they were doing like clinical trials on like a cancer treatment or something like that. I don't know. And so I thought, why not? It was really cheap when I looked at it. So I bought some shares. And so you'll see what happens with that later. I just recently sold them in December. So anyways, let's just go right into the market. The market did not do well. So I'm going to kind of quickly scan through there. In fact, the Dow did squeeze out a win though at the very end. So the Dow did finish up. Universal Display had a good day, but most of everything else was red, as you can see. Let's go straight into our winners and losers. So yeah, we definitely took some big hits in these 2 days, so be prepared. But we did have our best gainers were Canopy Growth and Tilray, of course, plus the other stuff I sold. And then our losers, let's see, our losers I put 2 pages of losers on here because we had a lot of them. So here's the first page, and then the second page. Our biggest losers were Amazon, Nvidia, and Netflix. So if you want to pause and you want to see the other losers we had, you can. But yeah, so not a great day. The next day, the Dow did also not great, and the NASDAQ also did not great. So the Dow actually finished up 20 points. It was kind of all over the place though, but it did squeeze out a win, and the NASDAQ did not. The NASDAQ did very poorly. This was around the time that Jack Dorsey and Sheryl Sandberg, so Jack Dorsey, the CEO of Twitter and Square, and Sheryl Sandberg, I think she's the COO of Facebook, they were getting grilled by, Congress about the privacy things. And so it was just dragging down the tech. And that's why that was the main reason why NASDAQ went down. But yeah, so let's go to our winners and losers and see how bad we did. We lost around a little over $11,000 that day. And so we didn't really have any big winners. Boeing was our best one. But if you go to our losers, Apple did very poorly, and Amazon and Nvidia were our bottom 3. So yeah, not a great day. So let's just go into a few articles. I'm not going to talk about a lot because a lot of it's old news that you probably already know, and it just wasn't terribly interesting. But one article that caught my attention, which I'll link to in the description, Walmart's Handy partnership is the latest retailing trend. Handy is actually the company they partnered with. So this article talks about do-it-for-me services, kind of more like it's the opposite of DIY. So you buy a product and they have like a supplementary service where you can hire and they can come and put like the TV together or whatever it is you ordered. They can put it together, install it, and get it all set up so that you don't have to do that. And they're saying that it's become a growing industry and a lot of people are doing it, like Amazon, Best Buy, Target, IKEA especially has, they have a team of people. If you want to hire them, they can put the furniture together for you. And so they were talking about Walmart is trying to get into that space to kind of help them boost their sales and stuff like that. So I thought that was an interesting article. And Let's just go into the next day of articles. There's a lot of them, so I'll link in the description. I would just suggest reading the headlines if, in case you miss something that might look interesting to you, you can kind of skim through it. But the one that I'm going to talk about is this one article that is called "A Stock Market Bear Signal is at a more than 4-decade high," says Goldman. This kind of caught my attention, obviously, because we might be heading in a bear market, or we are in a bear market, but might be heading towards a recession. So this article was interesting, and they have a chart here that shows at the very end that circle with 75%. It said it's its highest it's been since 1975 when we went in that bear market. But again, at the end of the article, they said like it's not all gloom and doom. It's just prepare for kind of lower than anticipated returns over the next few years or so, or a couple of years. But they're not like saying it's going to be the worst thing ever. So, it kind of makes me feel better at the end. Like I can handle 1 to 2 years of bear market, like that's fine. And then I'll start buying everything else again once it's cheap. That's kind of the plan. That's what I should be doing. And that's what everyone should be doing, I think, is what they say. Again, I'm not a financial advisor, so I'm not telling you to buy stuff, but that's what the analysts say to do in a bear market. But anyways, I'm not too worried about it. Like, yeah, like bear markets suck, but we are overdue for one. So like if we did have one in 2019 or 2020, I'm not going to be like, crying about it. So I'll just try to capitalize on like put options and stuff like that to kind of make a little bit of profit if I can. And then I'll just try to load up on positions that I really like so I can average like dollar cost average down. And so that's really my plan. And I'm going to leave the video at that. So if you like the video, please hit that like button and subscribe if you haven't already. I hope you guys had a fantastic New Year's and New Year's party, New Year's Eve. And then hope you guys have a very prosperous 2019 profit-wise. I'm crossing my fingers for you and me and everybody. But yeah, so we will see you tomorrow for another video. So have a good night. Hey guys, thanks again for checking out this video. If you want another way to support the channel, please check out that Patreon link up there at the top. You get access to my private Discord server where we chat about different companies we're looking at investing in. I also post my current trades in real time as well as news headlines with little mini summaries. And you can also get discounts on any merchandise that we sell, like a shirt like this, for example. And if you want to just subscribe to the channel, I would appreciate that as well. You can just click that black logo there at the bottom. Thanks again for watching, and we'll see you in the next one.